Good morning and welcome to the Business Today show. I'm Sakshi Batra and we are here to get you all the market opening action. First up, let's take a look at what's hot in the corporate and the financial world. S&P 500 closes at a fresh record high. In a holiday-shortened session, US markets open after Christmas break, while Asian markets rise in a holiday-thin trading session. Silver hits a new high, and the Wall Street is now expected to see some lower volumes of trade due to year-end holidays. Samsung rules out India IPO, focuses on AI and expanding consumer finance appliances as well for the PLI scheme to manufacture mobile displays in India, signaling confidence in long-term growth. Ola Electric secures 367 crores PLI auto incentive for FY25, strengthening its manufacturing scale and push for localization in India's electric vehicle production with the approval from the Ministry of Heavy Industries. Train fares hiked from today. Railway Ministry has announced these new ticket prices with increase of 1 paisa per kilometer for ordinary class beyond 215 kilometers and 2 paisa per kilometer for non-AC and AC mail express services as well. Suburban fares, however, remain unchanged. Adani Group stocks are in focus today as Navi Mumbai International Airport commences operations, easing Mumbai airport congestion. Jefferies issues a buy call on Adani Ports, boosting sentiment in the group stocks. Let's straight away look at what exactly is going to be important for all of us to look at in this Friday's trading session. After yesterday's truncated holiday that we saw on account of Christmas, the markets are back. The Gift Nifty is still indicating a softer start. Remember, we've been facing a lot of pressure at 26,200 about. Those levels, 26,121 is the level at which we could be opening today. So tad bit weak. Even on the Nifty Bank, a 1/10% loss is being indicated when the markets open at 915 as well. Remember, what we're also going to be seeing is that after 3 sessions, it was Wednesday's trading session that actually saw some losses and profit taking right before the holiday session, and that kind of a low volume trade is expected even in trade today. IT, auto stocks, remember these were the sectors that were also pulling down on Wednesday's trade, and today again there could be some softness. Let's actually go across to our guest on board. We have Mayuresh Joshi, the head of equity research at William O'Neill India, joining in on the program with us. Warm welcome to you, Mayuresh. Season's greetings for a fantastic new year ahead. First up, tell me, how are you looking at the new year? What does it excite you with? What are your plans?
Morning, Sakshi. Season's greetings to you, your family, everyone at India Today, Business Today, and hope that the new year brings a lot of cheer, joy, health, and prosperity. Having said that, I think the expectation largely from a market perspective is that we have underperformed to a large extent over the last 12 to 15 months. And therefore, earnings is going to be the key and extremely critical. How we have fared in Q2, I think the large part of market belief is that over the next 4 to 6 quarters, the base case scenario for earnings growth should be between 12 to 14%, which lays the case for a re-rating of sorts when it probably comes to sectors and stocks. FPI selling, probably the underperformance is something marred by these foreign institutional investors. But at some point of time, as macros have largely stabilized, inflation is largely under control, RBI has given ample amount of liquidity, the budget will probably provide a path in terms of fiscal consolidation as well as the capex plans, including the borrowing program of the government. Probably the macros look very well placed compared to a lot of economies in the world. And a combination of both these factors, including consumption expected to come back with GST rationalization, the tax rationalization which has already happened, might actually create a fillip as we head into 26. So optimistic on 26, expecting markets, certain sector stocks to do well. FIs, FPIs will return, in my opinion, sooner or later as we head into 26.
So, okay, there is a positive outlook in the year 2026 that you are already looking at. So, let's try and understand in more detail as to which are the factors that will drive the markets. Let's talk about the first key trigger that the markets will be now looking at is the budget that will be coming up in February. We are just about a month away from that. Will that bring in a lot of themes back into action? We're already looking at railways and defense, the erstwhile favorite themes, start to pull up again towards the end of December. What's your thought there?
No, I think it should be a very well rationalized budget, in my opinion. Again, the fiscal path should be adhered to. The government borrowing program should be within limits as well. And therefore, I think both these factors will lay base in terms of a reasonable budget. In terms of expectations going forward. In terms of the capex spends by the government, a slight bit of moderation can probably happen, looking at what is happening in terms of the resolutions on the US front. But again, I think certain incentives probably given to the infrastructure sector, to the export-oriented sectors, is something that the market is probably looking at. The markets is always hopeful, Sakshi, that there will be some rationalization that happens as far as the markets are concerned, whether it's LTCG, STCG, the STT part. But I think the market will take it in stride as we head into 2026 and the budget itself. So I think it should be a well rationalized, laid out budget, which should be well grounded for growth and supporting growth for the economy and the corporate sector as a whole over the next 1 year.
Absolutely. Marish, for a large part of 2025, and we've discussed so many times over on Business Today as well, that, the biggest overhang for the markets probably was in terms of the US-India trade deal and the uncertainty around it. Even as we end 2025, we still do not have any clarity as to how soon can that happen. Of course, the positive talks that have continued are giving us some kind of a sense that this could happen, if not later, at least in the first quarter of 2026, in the calendar year as well. What's your thoughts there? How important and crucial is it for the markets to get over this uncertainty to finally chart a new path, which is, clear of all this, kind of volatility that we've been facing with?
You're absolutely right. If we had clear one headwind, then the market is probably looking at this juncture. And therefore, I think at some point of time, over the next few weeks, next few months, you should have a resolution coming through as far as the US-India trade deal is concerned. And once that is largely done, you will see a relief rally come into the market. But over and above that, Sakshi, I think we've already analyzed, a lot of analysts have analyzed the impact. Even if it goes through in the current avatar, it is going to create an impact of 60-70 bips in terms of the Indian GDP. It's not going to happen. A trade deal will happen at some point of time. And therefore, I think once these apprehensions and the actual trade deal happens, the relief rally will take place. And after that, I think the markets will probably look forward to what it always does. Earnings, macros, which I've said in the opening remarks, should see significant signs of improvement. They have, and in fact, they will. And therefore, I think if you place ourselves on both these aspects, to a lot of economies in the world, I think we are strongly placed on all these aspects put together, which will put India in the top quartile as far as equity markets are concerned for 2026.
All right, let's shift focus to finding out what the key trends could shape up as far as we are looking at the market opening in just a few seconds from now. 26,121 is the indication as far as the GIFT Nifty is concerned and how they have settled in the pre-open trade. You can see just 8 seconds remaining. 20 points lower is what we are given to understand, but we will keep an eye out on how some of the sectors like metals will perform. That's the opening bell for all of you to really look at how the markets are shaping up. Let's look at the Nifty, the first tick there, 26,114, slightly lower by about 27 odd points, a 1/10% loss there. Let's also pull up the Nifty Bank in front of you, and you will be able to see that 59,098 kind of levels can be seen there. Still a tad below, about 71 points lower in trade. The Nifty IT index slightly turning green after all those losses that we saw in the last couple of sessions. Let's look at some of the other sectors. Let's look at the metals pack, because that's the clear winner and has been in focus over the last few weeks as well, and that's where the momentum is shifting to 0.1% higher. And you can look at, but all the other sectors are in fact down into the red. You can see the real estate sector losing the most at this point in time. The FMCG sector is also lower. Pharma, oil and gas, autos, these are all tracking lower at this point in time. But on your screens, Nifty gainers, BEL, you also have Adani Ports. Remember, the brokerage houses have come out with an update on that. Shriram Finance continues with its winning run. Apollo Hospitals, Hindalco, You can also look at Cipla, all of these stocks that are actually doing very well in trade. Even Grasim is also pulling up. You can see almost about a 0.5% uptick for all of these stocks right there. Let's actually look at the draggers. So you do have Eternal, 1.2% lower. Zomato as the top laggard there. Bajaj Finance, IndusInd Bank, these are all the stocks that are still lower by about 1% in trade, but still holding up at 26,100 odd level. Let's see how this pans out in trade. Mayuresh, how do you see the opening?
No, reasonable on unexpected lines, Sakshi. So my own sense is that the markets are taking its stride. It's a typical year-end phenomena. Volumes will dry up now, and therefore I think you will probably see action which is happening in a very range-bound fashion. If you look at the PCR statistics, it is showing signs that the volatility probably is missing in the market, which is a good sign of sorts, as I see it.
Okay, so let's try and dig a little deeper. You mentioned briefly about the FIIs and how they have been completely absent in 2025. But the big question is what will bring them back, and do we have enough triggers for FIIs to turn their eyes back on the India market? How are you looking at that aspect?
They should. And again, I think I'm very optimistic because if you probably look at the psychology of FIs, I think they probably work on three aspects. One, the placement of any economy as far as macros are concerned. And as I said, in terms of inflation, in terms of liquidity, in terms of growth dynamics, in terms of what the government policies are charting out, in terms of India's growth going forward over the next few years, the next decade as well, we look very, very strongly placed on all these parameters. The second element will be corporate earnings. With a lot of support from the macro perspective, corporate earnings will take a U-turn. You've already seen Q2 probably play out as far as corporate earnings are concerned, where a lot of positive surprises have come through. And as we head into Q3, Q4, with more GST rationalization effects being more evident, government policies being more evident out of the monsoon season, which means government and private capex coming back strongly, will have a bearing in terms of corporate earnings, which should grow at a decent pace. And as I said, the consensus over the next 2 years or the next 8 quarters is a 12 to 14% corporate earnings growth. The third aspect obviously is in terms of global dynamics, which is obviously subjective as we speak. And therefore, if you put India, the emerging basket, and then compare it with how global macros are expected to shape out, in a worst case scenario in terms of tariffs and the slowdown in terms of a global economy, I think you will have a minimal effect, but we'll still be better off than large economies and most emerging economies in the globe. And therefore, if you combine all these three factors together, FIs will probably then start looking at markets which will probably outperform in all these three aspects. India will be right there at the top quartile. And therefore, I think the kind of pull-out that they've probably done over the last 12 to 15 months, at some point of time, I think in the next few months, in 26, they should return back to the Indian markets.
Okay, got that. Let me also just highlight for all our viewers some of the stocks that are looking up at this point in time as far as the Nifty 500 basket is concerned. You see TCI Finance, that's up by 5%. You also have names like Greenply Industries that's doing well at this point. You have a lot of forging related stocks that are doing up, doing very well at this point in time. Madhav Copper is up in trade, Modi Rubber. So all these commodity related stocks, ancillary related stocks are up and about in trade at this point in time. You can also look at Soma Textiles right now. These are the stocks, so very, very small stocks that are actually showing us some volume at this point in time. Let's also pull up some stocks like which have been in news. Vikran Engineering bagging a 459 odd crore rupees order. NMDC that signed an MOU with Colorado School of Mines as well. These are the stocks that you can clearly look at. Royal Orchid Hotels, that's another one that's looking at with a new 101 room upscale property in Gwalior that they have opened up. So tier 2 cities also getting into focus as far as hospitality chains are concerned. From the energy basket, SJVN is in focus. Remember, its arm, the green energy arm, has received 1,000 megawatt Bikaner solar project order as well. So that's another one that's in focus right now. So some of such stocks are actually doing well as far as the news flows are concerned. But let's actually shift focus to the aspect of metals and the precious metals that have so far garnered our strength. Remember Ola Electric, that's the one that has got that PLI that we talked about in the headline. That's reacting positively as well. In fact, let's take one brief view from Mayuresh on Ola, and then we'll go through the metals discussion as well. Meresh, how are you looking at Ola Electric at this point, 4% higher? Remember, this has been one stock that has been seen one of the worst, IPO performers, because investors who bet big in the initial few days or in the IPO have seen their value get eroded by half and even further. How are you looking at Ola Electric now that they've got this PLI incentive?
No, so sentimentally positive, but what happens, Sakshi, is that there is intense competition in the space they are operating out of. A lot of competitors, listed, unlisted, have these EV agnostic platforms that they've come through. Pricing obviously remains a key factor for the segment as a whole. Sales after service remains the other key factor for the sector as a whole. And therefore, I think if you map all this and you map all the developments happening with the stock itself, I think there are much better plays in the two-wheeler space, at least at this juncture as we speak.
Okay. Briefly also marking out for you viewers what we just mentioned on the railway and defense pack. All of these stocks are up and about right now. You can see RVNL, IRFC. You can also see BEL that's in focus right now, BHEL, HAL. All of these stocks are actually buzzing in the PSU space from the defense and railways pack. Keep an eye there, and you can actually see some more sectors that are turning green. So some pickup happening in the broader markets, mid caps, small caps, they are turning green. Even the real estate and the oil and gas spaces are turning positive at this point in time. That's a good sign. Right after opening a slightly weak, you can actually see more and more sectors now inching towards a higher note at this point. So we give this gives an understanding that there is some kind of a buying that's truly happening even at these lower levels of volumes. Let's talk about the precious metals, Mayuresh, that have been the biggest spotlight spaces in 2025. Gold, silver, now platinum, copper, all of these other metals also at record high levels, having seen substantial move there. Give us an understanding for the investors as well. In the new year, 2026, what should they expect? Because right now, they're dealing with a space of FOMO. One, from those people who felt that these kind of high levels, skyrocketing levels will not be sustainable. But gold and silver do not fail to surprise us on an everyday basis. Even today, they are at record high levels as well. So how does one really deal with the kind of move that we are seeing there?
No, so Sakshi, I think it's always a part and parcel in terms of the core financial planning perspective that it should form a small part of your portfolio. And therefore, I think I've always mandated and mentioned that if you're probably doing a gold or a silver SIP, I think you should continue doing that because it's a perfect hedge in terms of your equity portfolio that you are carrying. And therefore, I think depending on your risk reward, a large part of your balance towards equities, a portion of your balance towards bond or debt securities, and a very small portion towards gold or silver in terms of SIPs should probably continue. I think it diversifies your portfolio and also hedges it to a certain extent.
Okay. Mayuresh, also help us understand with your 2026 view in terms of the key themes that will be important for all our viewers to really look at, track very closely. Are you also looking at a basket of stocks that one could look at for an outperformance in the new year?
No, so our take is that consumption as a theme should continue doing well. I think you've not even seen the effects because the GST rationalization move happened by the end of September.
Yeah.
So you'll gradually start seeing the effects in Q3 and a full-blown effect in Q4. So consumption as a basket is something that will continue doing well, in my opinion. So select FMCG stocks, select domestic apparel manufacturing stocks, certain hotel stocks within the consumption basket will continue doing well. Government private capex will come back very, very strongly. The government will also provide impetus to both these sectors, including manufacturing. And therefore, I think certain good quality leadership, cement stocks as an example, certain power ancillary or power related stocks as an example, certain manufacturing stocks. So I think this is one theme along with consumption that can do well. And the supportive theme will be certain stocks within the BFSI space, very, very selective. Some PSU banks, some NBFCs can actually do well as we speak. So I think these sectors, in my opinion, can outperform in terms of earnings, in terms of government initiatives, and in terms of expectations of macros holding up, actually mirroring down in terms of their micros actually improving over the next few quarters.
So, Mayuresh, you talked about consumption. How are you looking at the forms of consumption that everybody is banking big on right now? The new age stocks within the consumption basket, the quick commerce companies, these are the stocks that have been a favorite space for investors to track all through 2025. How will they perform in the new year?
So I think it's a catch-22 here, Sakshi. I think they will do well because I think this is one theme that is going to pick up substantially over the next few years. But the risk factors that emanate from this theme is also that there are no entry barriers. The second perspective is that competition and technology is changing very, very fast, dynamically as well as we speak. And therefore, I think which new companies come out with what technology, at what optimization, I think all that will depend in terms of how the ecosystem probably performs. And therefore, I think
Sure.
we are monitoring that. Obviously, certain stocks within this spaces should continue doing well, driving that momentum. And therefore, you have to play these themes in terms of a strategic positioning. I think you have to play these themes and you have to keep a constant watch. I think if trends are evolving for those themes that you probably own, in terms of competition, pricing, etc.,
Yeah.
we probably need to then move on to the next theme within this. But I think this is one theme that will evolve substantially over the next few years.
Fantastic, Mayuresh. Thank you so much for your time on India Today as well as on Business Today television as well. Always appreciate your time with us, and Happy New Year in advance. And of course, we'll be catching up into the new year with all those themes that you just marked out in detail. With that, it's a wrap on the Business Today show, the morning up opening show as well this morning. But see you again at 3 p.m. for the market closing action as well. So don't forget to tune in at that time as well.